Hello, everyone. Happy Friday, and welcome back to Sin City Crypto. My name is David. I'll be one of your co-hosts. And on today's show, we are discussing multiple things, of those including Gary Gensler and the SEC have poured cold water on our hot streak, our $2,000 Bitcoin move. 28K is now gone. 25K potentially going to be gone. We're going to look at Bitcoin's price action. Where is it going next? Of course, today is Forest Friday. We have him joining us. Also, we have a few videos to show you. The jobs numbers come out. The unemployment rate went up. Does this mean we're going to see a Fed rate cut sooner than a lot of people have predicted? We're going to discuss that and much, much more. But first, here's your other co-host, Big Rob.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, welcome to the club. We do something special here. Well,
what do we do?
It's entertainment-focused cryptocurrency information. Unlike the other channels that everybody claims to drop the entertainment, we deliver.
Deliver.
That's right. Can you stop?
Sorry. What's wrong with you?
We take old, boring, and stale information and package it up in a fun and sometimes odd way. Thank you.
Guys, if you're watching our channel, you know Friday is one of our favorite shows because it is the only show where you have 3 full-time co-hosts, and that is Forest Friday. So, Rocco, let's bring my friend Forest. Forrest, how you doing, brother?
What's up, guys?
Man, I feel like, it's only been a week, but it feels like it's been 2 months. We miss you, man. How you been, Forrest?
Been too long.
How's your week been?
Pretty good. Just very choppy, nasty market the last couple of weeks. Really the last couple of days, too.
Fair enough. Forrest, I asked Robin this question 2 days ago when we got into a fight. I'm going to ask you, okay? So we went from 26 to 28K on Bitcoin after Grayscale got announced, right? And then we lost half of that move, right? We gained 2,000 and we lost 1,000, came back down to 26 flat. Rob's over here trying to convince me that that's normal.
Bro,
after
you are like a scorned woman here. Like you're
Rob
like,
is trying
you're
to
like me and
setting up a question.
We had an argument 3 weeks ago.
Once I remove
Mom
the
goes out
blade
to dinner, and then you're like,
for my boot, I cannot return it. Now, Forrest, Rob was trying to convince me that on big news like that, right, where the market pumped 2,000, it just lost half of it right away. Did that tell you anything about where the market's at, like how the sentiment is, the psychology of the crypto market, the retail investor?
Yeah, a little bit. I mean, ultimately, if you look at the Grayscale news, it's bullish, but it's not bullish on an immediate basis. Obviously, it was bullish on an immediate basis for a short period of time, but it's not like, boom, we have a Bitcoin ETF today. All it does is greatly increase the odds that we do get a Bitcoin ETF. But the earliest now that they delayed them yesterday, as expected, the earliest now I believe is like October 16th. October 17th. So that would still be 45 days away, which we potentially have a lot of bad things happening that 45 days. FTX selling, the government selling. But more than likely, we're looking at a 2024 ETF date. So while, the Grayscale news is bullish, there's a lot of bearish things still to go on before the end of the year. And it just means that we're more likely to get the big Bitcoin ETF, but it's maybe not until 2024 still. The SEC can still delay it.
I'm bullish on being bearish. Let me explain why. That just gives me more time to accumulate until it's evident. We're going to get a spot ETF, right? I don't think anyone disagrees. I don't think anyone on this panel disagrees. I don't think you watching disagree. We're going to get a spot ETF. And if it gets delayed, guys, let's look at it this way. It gives us more time to stack the BTC that we need. Speaking of stacking, we have a couple sponsors we want to stack here and thank, the first being Cam's Blue Wire Technology. If you want to learn how they can help your business scale your networking, your IT, and your cybersecurity, and you just don't want to dabble with that because you don't have time or the expertise, and you want to focus on making money for your business, visit bluewiretech.com or simply click the link in the description of this video. And we are pleased to announce a brand new sponsor to the channel. Today's show is also brought to you by Radix, the leading layer 1 DeFi in our space. Radix, which is radically better DeFi. If you want to learn more about what they do and play in their sandbox, visit radixdlt.com. So big thank you to our sponsors. Now, we're going to go ahead and get our funnies going here, okay? So, first, You know I like animals. I don't really like cats a lot, but cats are kind of funny and cool, okay? Here we have a cat who picked a fight, well, with himself. What'd you say? What? This mother? What? You know, guys, it's the little things in life that really make me happy, okay? And this is, I guess, kind of funny. Not really. The Raiders are now worth $6.2 billion, according to Forbes, which is a $4.1 billion increase since moving from Oakland to Sin City. I would love to take credit as a channel for this, but, well, we can't do that. Robin, what are your thoughts? You're a big Raiders fan here. Vegas just made the Raiders worth more money.
I mean, I moved to Vegas. I became worth more. And that's why we're here. Sin City Crypto, man, you know.
Yeah. Forrest, are you a Falcons fan? I know you're in the Georgia area there, Atlanta area.
You know, I'm a Falcons fan when they're good, which isn't very frequently. So
at least you're honest.
You know, at least I'm a Bulldogs fan.
Okay.
Yeah.
I like Bulldogs too. I like French Bulldogs. They're actually my favorite, but they're very costly, I hear. Anyways, moving a little off topic here. We do have this piece of news. Visual representation. No, that is not the Hoover Dam. That is trillions of dollars, and Gary Gensler is the dam, the wall that is holding it back for all this money to flow into BTC. It's only a matter of time, guys. Speaking of Gary Gensler, guys, they're hiring. Interested in a career to help protect everyday American investors, check out our job openings. Gentlemen, I'm thinking one of us should take one for the team and go apply and see if we can help him out over there.
Infiltrate him from the inside.
Yeah, anyone want to volunteer, Robin?
No. Pretty clear. There you go.
Okay, fair enough. So, guys, if you're watching, if you want to make a impact and help protect investors like Gary Gensler has been doing for the last 4 years, go ahead and visit sec.gov, and you can apply and potentially get a job working there. Now, gentlemen, today, jobs numbers came out. And so this is one part of the economy that the Federal Reserve looks at.
Is that where everybody's at? We only got 60 people in the chat, and and 28 likes. They must all be looking for jobs. Let's try to figure it out.
Unemployment rate is up, actually.
Try to figure it out, but you can help people find jobs by hitting the like button.
Yes. Now, guys, we know a couple things, right? Prices / inflation and jobs, employment. That is the Fed's two-pronged approach to the economy. And well, unemployment rate has been sitting steady around that 3.5% level for a very long time. And so what that has allowed the Fed to do is continue to hike interest rates and take a look and say, okay, people aren't losing jobs because we're siphoning money out of the economy, which has allowed them to continue to raise interest rates and have a more hawkish narrative. Well, that might have changed with this new jobs report. As you can see here, guys, highlighted in yellow, the unemployment rate has ticked up by 30 basis points, so 0.3%, from 3.5 last month to 3.8%, with teenagers 16 to 19 leading the way. Big bump there. That is up almost 1 full percentage point in over a month. So age 16 to 19, they're just not working. If we look here at unemployed persons at work part-time, that number ticked up significantly as well. So this is part-time for economic reasons. So people picking up extra part-time work because their bills are higher, or they just got a mortgage, or whatever the case may be. That saw its biggest jump on this chart, right? So we went from 40, and this is in the thousands, by the way. So we went from 4.1 million, 4.14 million to 4.19 million, back down to 4 million, and now we jumped up from 4 million to 4.22 million. And so, you know, it's not common sense. Things are more expensive. Buying a car now, I think the average price of a auto loan is north of $700 for your average car. $700. That has a lot to do with inflation. Has a lot to do with the interest rate. We know 30-year mortgages are creeping up over 7% as well. We know gas is still here in Nevada over $4.50. So everything is up, and people are going out there and looking for part-time jobs, and these metrics say so. But one thing that was interesting to me, guys, is so we know that when GDP numbers come out, or any numbers, as a matter of fact, right? They go back 1 month later, they revise the numbers. Another month later, revise the numbers. GDP gets, I believe, and you guys can correct me if I'm wrong, 2 revisions. Well, the payrolls, look at this. In June, original reported 209,000. 1 month later revision, 185,000. 2 months later revision, 105,000. How could you be off by 50%? And so this is what a lot of people say when the Fed sees a number, right? They see jobs report, and then 3 days later, they have an FOMC meeting, and they're like, oh, no, we got to raise interest rates. That is what a lot of macroeconomists have been saying is with these revisions, you got to let it play through the system. And so, and then one more thing I wanted to show here. Again, you can see, guys, this is...
How do you mess up by 50%?
That's what I'm saying, dude. This is kind of asinine to me.
That's like I got an A in math, and
never mind.
Actually got a D. Way off.
Forrest, what are your thoughts on the unemployment? I mean, of course, we're speculating here. Do you believe that this is enough for the Fed to at least pause? Because as of right now, people are still expecting 1, maybe even 2 25 basis point rate hikes, and then cuts going into end of 2024, early 2025. You think this unemployment rate ticking up, what kind of impact do you think that's going to have on Jerome Powell and what they decide to do?
Yeah, maybe I can share my screen here, and we can take a look at the unemployment rate overlaid with S&P 500, because I just want to. So in orange here, this is the unemployment rate. I'll put UR there. That's oil because I think it is relevant because it's breaking out. And up here is the S&P 500. The thing that's dangerous about what I think the Fed's doing, I know it's a hard job, and I'm not looking at all the data they're looking at. It's easy to sit back and be like, oh, Jerome Powell should do this. I've been in the camp that they probably should have paused 2 rate hikes ago, and maybe even cut last time, just because what you'll have with this like laggard effect is that oftentimes when unemployment starts running, it runs really, really fast. It accelerates upwards, right? Now, you saw how obviously it spiked with COVID, understandably so. But even so, when you have this kind of slow ramp up, that's when you can really, really, see a recession, essentially, right? This is, and I'll get rid of crude oil here just to make this a little bit easier to look at. But up here, we've got the S&P 500, and all of these large drawdowns have coinciding unemployment rates increasing. All right, so unemployment rate for me is the canary in the coal mine for an incoming recession. Obviously, the other thing that a lot of people look at is the yield curve, which has been inverted for well over a year, again, signing that a recession is incoming. So for me, like, we're in September, historically the worst month for the S&P 500, historically the worst month for Bitcoin. Now is not a time where I want exposure to risk assets. We're starting to see, or a lot of exposure to risk assets. We're starting to see unemployment rate tick up. We get, 2 or 3 more months from now, we start seeing unemployment rise up to the, 4% plus range, 4 or 5% range. All of a sudden, that's actually pretty worrisome. And you'd expect to see a pullback in the S&P 500. Maybe they can get it under control. Maybe they pause here, and the market likes that. And the jobs market's stronger than or as strong as they've assumed it to be. But maybe people have just been living off of credit, and credits run out. So,
not maybe, for
not to paint a bleak picture. I'm sorry.
Not maybe. They have been. We have officially surpassed $1 trillion in credit card debt. Delinquencies are going up. If you take a look at these smaller banks and their loans that they're putting out, a lot of people are defaulting on those. It's only a matter of time before it makes its way to the larger banks, Chase, Bank of America, Wells Fargo, all the above. And so it's already happening. It's happening. People's discretionary incomes have completely tanked. I did do a poll on Twitter to kind of gauge, as far as our community, what the and actually we can take a look at it right now. What people's discretionary income is. And Rocco, if you want to pull out my laptop, I'll kind of show this here. So here we go. What is your average monthly discretionary income? You see majority of people, 42.7%, less than $500. So after paying all their bills, they have less than $500 left over. And before I get Robin's take on this macro stuff, for us,
Yeah, I'm about at 450, bro.
What's up?
I'm about at 450.
So you would be part of the majority.
Yes.
Now, Forrest, I want to ask you before I get Robin's take on the unemployment. We shared an article, it was yesterday or 2 days ago. One of the Bloomberg analysts said that we're not going to see a big price movement to the upside in Bitcoin until the stock market crashes. And because of that, the Fed would start printing money again. So essentially, they're saying without new money printing, Bitcoin and crypto are not going anywhere. What are your thoughts on that? Do you agree? Do you disagree?
I wouldn't say I disagree. I mean, it's one scenario worth thinking about. I think it logically makes sense, but it's a pretty bold prediction to say that crypto can't go up until the stock market crashes. Now, I do think that the stock market, for reasons we just talked about, like we're seeing oil go up, which is a very leading indicator of inflation. We had this inflation conversation a year ago when it comes to oil and energy prices. When oil is in everything. Not only is it used for transportation, not only is it super important for supply chain and keeping supply chain costs low and shipping costs low, but it's also petroleum byproducts are in just about everything that's manufactured. So one of the big causes of inflation, one of the reasons we saw among the rampant printing of money was oil prices. The whiplash we saw in oil prices following COVID, that jacked up inflation really, really bad. Now we're starting to see oil pop up again. So I do think that the S&P 500 can crash. I think we're at a high risk of seeing a large crash in the S&P 500. And I don't disagree with the idea that that's what it'll take for them to start printing again. I will say that Jerome Powell has been pretty clear over the last year that they would rather over tighten and then rev up the money printer again and do it that way than under tighten and have entrenched inflation. So we're going to end up seeing the problem is we may not have beat inflation yet, and they may have to rev up the money printer. I think Truflation is sitting at around 2.7%, but again, oil's starting to rev back up again. And this is getting a little bit more political. I think this is why it's been so important from a political standpoint to be energy independent. And I just don't feel that as a country, the U.S. is particularly energy independent right now. But that's getting into more kind of political policy.
Yeah, but those are good points. Rob, what do you think about unemployment rate ticking back up, and what do you think the Fed might do, and just a macro state?
I still don't think that we're not in like the danger zone, I guess, which historically when the Fed has made moves has been well over 5%. And I think that this is just noise. I'm not saying that it's not important, but definitely not enough to move the needle to the point to where they're going to cut rates. I think that they're set on keeping rates where they're at for the midterm until something breaks. Now, could we get a rate cut here soon? Well, I think it's possible that we get some issues in the banking system, or we have that credit bubble. Who knows how that would play out? But I don't think that just the jobs number is going to make the Fed make a drastic move all of a sudden. It's not that serious compared to historical numbers. So,
is there a number in your mind that would make the Fed? Is it 4.5? Is it 5%? Or just,
I think it's over 5%.
That would be big. That 5% is a large number.
But that's where it's been in the past when we had economic recessions and very strong issues. So.
All right, guys, let's take a look at mining. You might be wondering, well, why did Bitcoin dump? We might have an answer for you. It might be the miners. So let's take a look. So first, I want to show this really cool video from Bloomberg. This video apparently dispels mining FUD. And so it's about a minute and a half. I started watching it about halfway through. I stopped. It was good. And I like to watch them like I've never seen them before with you guys so you can get a raw reaction. And so here we go. Bitcoin mining FUD expelled. Let me check my audio real quick, guys. All right.
You don't got any sound there, brother.
Oh, no sound. All right. Guys, we're going to work on the sound and we'll maybe show you later. But in the meantime, here's what I'll do. I'll show you this. Bitcoin plunges to 26K as miners sell big. And yes, that is a bear. Bitcoin has plunged towards the 26K level, now 25.5. As on-chain data shows, the Bitcoin miners have been participating in a sell-off. And here is this chart. This chart is from TradingView or Crypto Quant. You can see here on the top in the red is miners flow to exchanges, okay? I'll make it a little smaller. Anytime we see a big uptick here, we see the price of Bitcoin start to drop. Obviously, if miners are moving their tokens, their Bitcoin on exchanges, well, they're looking to sell. And so we had the largest we've had over this time period, which was over the last 30 days. We've had the largest miner flow to exchanges, and correspondingly, we have had a drop in the price of Bitcoin. I pulled this up from Glassnode. This is the difficulty adjustment percentage change on the Bitcoin mining network. You can see here, and I'll kind of zoom in here so you guys can see. So we have white is the price of Bitcoin. The little stair-stepped orange is the difficulty, right? So the higher the difficulty, no, let me do this. The higher the difficulty, obviously, the more hash power, the more power you need to mine a single Bitcoin. And this thing just completely, there we go. So let's do this. Let's zoom in this way. And so we are at all-time high on difficulty. In the green here, you can see we have been ticking up. And if I throw on the Bitcoin hash rate, that is also around all-time highs. And then if we go to miner revenue, we saw this big ordinal pump, and then it came back down. And so we know for the network to keep going, miners need to make money. And the beauty of Bitcoin and the way it was set up is once, if miners start pulling their ASICs out of the network, difficulty starts to go down. But Forrest, what we're seeing here, difficulty is at an all-time high. Bitcoin's back down at 25.5. We have a halving coming up in 8 months, which is bad for miners. What are your thoughts on this whole situation? Do you think a majority of it is the miners, or do you think there's anything else going on behind the scenes with this recent dump in the price of Bitcoin?
Yeah, I mean, it could be a lot of people just taking opportunities to de-risk going into what is historically a really bad month. This is for, I get I catch a lot of flack for my opinions on Bitcoin, but this is ultimately the specific reason. It's like proof of work has this overhead in terms of energy costs. Like the miners have to sell Bitcoin in order to offset their energy cost. And for Bitcoin to run, it's a necessary evil, but it unequivocally results in lower Bitcoin prices, right? Because you're just having to sell, miners are having to sell Bitcoin to cover energy costs. Pretty straightforward. Whereas proof of stake, which again, you can get into like the debate of what's more decentralized, what's better, what's a better consensus mechanism. But proof of stake doesn't have this same issue in terms of energy overhead. So yeah, I know I catch a lot of flack for that, but we're seeing it play out. And right now we're just in a very low demand period, right? So you've got supply of Bitcoin coming in through miners that has been pretty steady. That kind of pent up. It was pent up, and miners, it looks like they've dumped all at once, which is unfortunate for price action. But eventually the goal is here that we'll move to a much higher demand period, right? We're in a low demand period. It's hard to, we're in a high supply period in terms of, the Bitcoin miners selling off. But you also have supply potentially coming in from Mt. Gox, supply potentially coming in from the US government selling off Bitcoin. But you don't have a lot of demand drivers. Even we saw this grayscale win drove short-term demand, but it wasn't like an immediate thing where it's going to increase Bitcoin demand. For us to really actually increase Bitcoin demand, the catalyst that I'm looking for is the Bitcoin, the grayscale, or not the grayscale, the BlackRock Bitcoin ETF. You have to be able to offset all of this supply with an excess of demand. And right now we're in a low demand, bear market, slow bleed, time capitulation, whatever you want to call it. Where there's just not a lot of excitement or new entrants entering the market. And you just saw in the survey, less than $500 of income of extra income after paying your bills. People don't have a lot of money right now to be putting into risk assets like Bitcoin. And Bitcoin, in my opinion, I think objectively is a risk asset. It trades like a risk asset. It's hard to say an asset with 70% drawdowns is. And I'm not hating on Bitcoin. I'm invested in stuff with way higher risk than Bitcoin, but I do believe that Bitcoin is a risk asset. People just don't have the extra income to be throwing into that right now. So we are in a relatively low demand period for Bitcoin and a high supply period of time for Bitcoin. And I think it's just being reflected in the price and the drawdown that we've seen from recent highs of 30, 31K. Oh, I think we lost your audio.
Sorry. There we go. Yeah. There we go. Saying I think we got the audio fixed on the laptop and on the regular mic. And so I do want to show this video, the mining one I was getting ready to show. We should be good on the audio, so let's watch.
Almost all of the energy that is being used for mining in Iceland today is what is called non-guaranteed power, which is basically a byproduct of any power production.
Power generators, they have excess energy. That energy would have gone to waste, gone into the ether, but Bitcoin miners are in a unique position to buy the energy that would have otherwise been wasted.
Unlike a factory or an aluminum smelter that has to be online all the time with an even rate of electricity usage, Bitcoin miners can throttle back really quickly.
The aluminum smelters do not want to buy this power. Greenhouses do not want to buy this power, and households do not want to buy this power. And why do I say that? Is because of this curtailment clause, which means that we can get an email at any given point or a phone call basically saying, we have to shut you down by so much or completely shut you down for so long.
So this ability to sell non-guaranteed power is creating a new market opportunity in Iceland because companies can sell the excess supply that it has without having to build new generation immediately, because this is power that would have gone to waste anyway or unused.
We're the buyers of last resort when it comes to energy buying. We're basically buying the trash that no one wants. We're buying the energy that no one is using. And that energy is being monetized on behalf of the country that's selling it to us.
Isn't that interesting, Robin? It was only a few short months ago. Mining is bad for the environment. Oh my God, the people in Texas,
It's just the narrative
power.
by media. That's all it is. Nothing's changed. It's not like
That's what I'm saying. That's what I'm saying. The narrative is changing in media.
Yeah. I mean, at the end of the day, energy grids aren't 100% efficient. They're not used at 100% capacity, and that's for a reason, because they need to have more overhead for when there's more energy demands. So middle of summer, everybody's using their ACs. They need to have X amount of energy ready. But if it's not used, it does dissipate. Energy does, I don't really know if evaporate is the right word, but definitely dissipates. And so going unused, it's inefficient, right? And so why not use what's there and also secure the Bitcoin network at the same time? Makes sense. So,
And also help secure the power grid as well. Forrest, you have any thoughts on that video before we move on?
No, I mean, it's pretty straightforward. For me personally, just being brutally honest, the environmental factor. I know it's something that a lot of people take into account, but the environmental factor or the energy use of Bitcoin isn't something that concerns me in particular. But I guess it does concern, potential investors, and if they feel more comfortable with the environmental impact being lower, then it's a net positive for Bitcoin. It leads to more demand.
I'll say that right now you can use the scraps of the energy grid, right? And if Bitcoin were to get the adoption that a lot of Bitcoin maximalists are preaching, or just as kind of we believe that, hey, at some point Bitcoin will get to 100,000, 500,000, and maybe $1 million, and at that point there's going to be such an arms race for mining that perhaps just using what's left over on a grid is not enough, and that you have to build physical power plants to secure the network. I think that's something that should be discussed, even though it's easily dismissed and saying, hey, it will never get there. But the difficulty keeps increasing, and miners keep buying more and more miners, And at some point, if you were to just extrapolate the current trend of energy usage, at some point it would surpass just using the scraps of the energy grid. And well, hey, at some point, you think we'll build a nuclear reactor or build an entire power plant just to service a?
We're gonna build a volcano.
Yes, sure. Thank you. Anyway, appreciate it.
Go ahead, Robin. Do your thing. Yell at people.
Yell at people. Yeah, for sure. All right. So, big shout out. If you are new here, say hello so we can drop that hola back at you. Not too many new faces today, but a few that I spotted out. You got Mick Gregg, BC Alf, Mikatu, and to all of you, hola! Welcome to Sin City Crypto. Also, Jeremiah 0007 popped up in the chat. I wonder if that's my brother. He's also named Jeremiah.
And I'm a girl. I'm not a girl, but there's a person named I'm a girl.
Yeah, they've been in here quite often.
You think they're a girl, actually?
Maybe.
Put a 1 in the chat. I'm just kidding. All right, let's move on to our market segment. And today's market segment is brought to you by our other channel sponsor, I Trust Capital. If you want to hodl your Bitcoin, Ethereum, XRP, and all the other crypto tokens, and you want to enjoy those gains tax-free in retirement, you're going to want to set up a Roth IRA account via I Trust Capital. And if you use the link in the description of our video, not only will you help our channel, but you'll also help yourself and your bank account, as you will receive a free $100 once you fund your account. With that being said, Robin,
yes,
where the market's at? Where's Bitcoin?
So Bitcoin's coming in at a disappointing $25,475.
We're tanking.
And so did lose a $26,000 mark, but it does put us right back to where we were at the beginning of the week. Well, under where we were at the beginning of the week. But I don't know, man. You think all hope is lost and 20K here we come, or what?
I don't know. I wish we had a TA expert. Oh, we do. We do. Yeah. Forrest. I'll let you answer that question.
Yeah, let's share my screen here and we take a peek at Bitcoin.
Cool. All right.
Is my audio coming through?
Yeah, you're good.
Okay, cool. So what I want to draw people's attention to actually is this kind of chunk of price action here back in 2019, which was a pre-halving year. Obviously, you had your COVID low, you had your your May 2020 halving. Oh, I hear Rocco. Am I still going?
Yeah, you're good.
Okay, cool. Yeah, so this chunk of price action, this was our pre-halving year. This was after our bear market bottom, our bear market rally, and then it just turned into this nasty slow bleed. And then we've kind of found a bottom, and that very likely, in my opinion, would have been the bottom for Bitcoin had it not been for a pandemic, right? It's hard to take into account something like that. Now, this chunk right here is very interesting because we're seeing something very, very similar. I'll grab this kind of fractal here, and I'm going to drag it all the way over to where we're currently at. And it's just because we're seeing very, very similar price action here, where we saw a top, a slow bleed, a large liquidation and capitulation, followed by consolidation, followed by running it back, right? So far, slow bleed, capitulation, consolidation, running it back up, full retrace, actually more than a full retrace, consolidation underneath our prior consolidation, and then a slow build back up, right? So this kind of, and I'm not a huge fractal person. I'm not looking for this, fractals never play out the exact same 2 times in a row. You can just see even the size of the fractals totally different. This one's, would take a lot longer to play out than what we potentially have in mind here, or has taken longer to play out. But what that would actually look like is maybe September is a period of consolidation just above 25K. And then we start to build back up in October, November. Once we get through some more bearish catalysts. Now, I say above 25K, probably above 23K. As we zoom in here, looking at the daily chart, we have, I kind of painted the picture of like, hey, there's a lot of supply here. There's Bitcoin miners selling. There's the government selling. There's FTX has a bunch of Bitcoin and ETH and some other altcoins that they want to start selling as of September 15th, 16th, right? If that gets approved by a judge. So meanwhile, we're in this kind of nasty position where the Bitcoin halving doesn't actually come in until 2024, and a Bitcoin ETF might not come in until October, but more likely not until 2024. So we could be in a situation where the rest of the year is just pretty nasty chop. Now, we do have, the question is, where does demand actually come in for Bitcoin? Well, right now we're seeing the demand for Bitcoin has been coming in historically in the recent past in this 25K region. And that was prior resistance, right? As far as, looking at margin pressure levels and risk reward levels, we have some big ones here between 23 and 24K, right? So this would be an area that I would expect to find some demand in. This is not an area that you want to see Bitcoin fall through. We start to see Bitcoin fall through this region for whatever reason. Maybe it's the government selling off a lot of Bitcoin. Maybe it's Binance going under. Maybe it's the Mt. Gox distribution. Maybe it's FTX selling. Maybe it's all of these things push us through this support. Then our target would be 21K. And I personally, I know some people have some more bearish targets. I personally don't foresee Bitcoin taking out this low around 20K. I just don't foresee Bitcoin going below. And I could be wrong. Maybe I'll eat my words. I've been bearish since we broke this trend line. I've been, risk off for the month of September. I'm bearish for the month of September, which could just result in a little bit of chop here. I'll eat my words. I am bearish, but I still don't think we're going below 20 to 21K. If anything, I would expect some chop, maybe chop back up to 27 if we get any good news. But more so, it looks like 26K seems to be our more recent ceiling. And we could come back down to test these 23K areas. For me, I'm just stablecoin yield farming, trading level to level. I've got some exposure to Solana and Ethereum because those are the two coins that I want exposure to, at all times. But I'd say I'm probably 75% stablecoins right now, which is pretty high for me historically. And I'll just, jump back in if we see anything super bullish. What would be the trigger for me to jump back in would be obviously if we were to just run it right back up for some reason and push back up above 31K, that would be super bullish. But if just in general, 31 to 32K is the region that if we start pushing through 31 to 32K, then it's things are looking very, very bullish and we're probably headed much higher to like 38, 42K. Otherwise, I'm fine being in stable coins and waiting for some opportunities to buy some altcoins lower. I would love to pick up Solana at $12, $14, $16. I don't hold Bitcoin, but I'd be looking to pick up Bitcoin in this 23 to 25K region. Maybe lower, but I don't think you're going to get much lower. I'd love to pick up some ETH at around 14, 1500. So yeah, I mean, I do think we probably go lower, but I don't think it's like a lot lower in a lot of the majors.
Okay. We know the monthly candle just closed. Do you look at the monthly candle at all, or the monthly chart at all on BTC?
I personally don't. I don't put a lot of stock into that. It was just a nasty monthly candle that closed. Took us outside of this trend line and closed. I personally don't take a big. I just feel like all of the data that you need, and you get more granular data in like the 3-day and the 1-day. I just feel like the monthly's kind of, for me, a little bit obtuse. It doesn't give you it just gives you like kind of 4 data points for the entire month, but in reality, a lot went on in this month. It doesn't kind of capture the fact that we temporarily ran it back up and tested 28K. So I know a lot of people do take that into account. I just personally don't. I'm not saying it's wrong, to look at the monthly candles at all. It could be quite useful. It's just not something that I historically take put a lot of analysis into.
Okay, cool. So let's take a look at what the rest of the markets are doing real quick. So this is via the crypto bubbles on the daily. Everything is in the red with the exception of Toncoin, the open network, which is the Telegram token. Thorchain, Myota, Caspa in the green as well. Pretty much everything else is in the red. Rollbit, that's the gambling thing, right? Rollabit. That is down 10.6%. KuCoin token down 7%. Render, Hedera, Theta, just everything in the red. Forrest, if I can ask you for a chart on Chainlink. We shared some news yesterday about Chainlink partnering with Swift and integrating and essentially upgrading their messaging system via their CCIP protocol. And a lot of people were extremely bullish, saying, hey, you're adding more use case to the Link token. Did that make you more bearish, more bullish? And if you want to talk about that through the chart and kind of give us some price targets to look for. I've been accumulating Chainlink. Is there a level that you would, tell me that, hey, this is a level you should look for if it does hit this? There's a lot of buy orders coming in, or vice versa, maybe on the other side.
Yeah, so with alts, so I kind of talked about like Bitcoin and Ethereum, like maybe they go down to 1,500 again. Anything could happen. They could nuke and we could see new lows. But my base case is for Bitcoin like 23K, Ethereum 1,400. Like I do think they could maybe wick lower than that. But even Chainlink here, which is kind of a larger cap token, we just see a ton of demand here. We see a ton of demand anywhere below $6. Right now, we are below $6. We've gone as low as $4.77, but it didn't stay there for very long. Look, again, this is a demand issue. We just aren't seeing a ton of demand for crypto in general, and we're not seeing a ton of demand for altcoins. So, yeah, Chainlink can improve and they can throw out an announcement, but right now we're just not seeing that speculative demand to push the price up higher. I think you're fine accumulating in this region anywhere below $6. I think that's going to work out really, really nicely next market cycle in 2024 and into 2025. You very, very likely see something like this, and you see, us going. I'd be shocked if we didn't see a $15 Chainlink, in the next year or two, which isn't like a crazy. 15. So, okay. There's 18, right? There's 12 kind of somewhere in the middle here. I'd be shocked if we didn't see at least a 15 to $18 Chainlink in the next year or two, which you got to think like that's a 3X from where we're at right now. That's a really, really good return. Even if it takes you a year to capture a 3X opportunity, you're outperforming a lot of hedge funds by just getting a 3X. A hedge fund can get 15% and they're thrilled. Obviously, you're taking on a lot more risk than a more diversified strategy. But all that to say is just we see where's the demand, even in a bear market. In a bear market, where is the demand for Chainlink? It's below $6, right? So that's where I'd be looking to accumulate. Could we drop to 2 or 3 on a crazy wick, or could things just get way worse than where they are right now? And, all these, bearish catalysts come in, the Mt. Gox distribution, the government selling Bitcoin, the FTX selling off a bunch of altcoins. Yeah, that could, maybe that pushes us low, but I would expect a recovery back up to where we have the bulk of this volume, which is around $6 to $8. So I personally don't foresee Chainlink going too much lower. And if it does, I expect it to return rather quickly. So I think anywhere under $6 is a good accumulation. You're just going to have a little bit of longer time horizon with Chainlink. Like anything, really. I think the time horizon for demand to come back into the market is 6 to 12 months. That's probably how long it'll take the Fed to pivot. It's probably how long it'll take the Fed to start printing money again. Probably how long it'll take for us to get a Bitcoin ETF and for the Bitcoin having to roll around. So I think we're in that last home stretch here, guys. I think it's we're close. We're real close.
Awesome. And guys, just remember, right? Even if price stays suppressed or Bitcoin continues to bleed for the next 2 months or whatever the case may be, if you're watching in the depths of the bear market when everyone's negative and all your friends and families laughing at you, then you got to believe that crypto and Bitcoin are going to come back in a big way. And so you just look at that. I know it's a little frustrating watching your portfolio down 70, 80, 90%. And, you just want it to go up. But I'm telling you, it's just giving you more time to accumulate, because for all we know, this might be the last big bear market we have. Who knows what the markets are going to look like? with the spot ETF, with the institutions coming in, with financial advisors now being able to move assets and people's portfolio into crypto and Bitcoin. So that remains to be seen. Also, we got a new whale member. Just kidding. Renewed whale member. Jimmy rejoined whale member. So a big shout out to you, Jimmy. Rocco, let's give it.
Arr, she blows.
I do want to give an extremely special shout out to all of you that support this channel, but especially our whale members, the highest tier membership we have. We appreciate the support. You guys get credits at the end of the show. You also have a page dedicated to you on our website at sincitycrypto.io. So big shout out to all of our whale members. Also big shout out to Jimmy for gifting 20 memberships. So Jimmy, we appreciate you, the sugar daddy of this channel. Now, let's move on, guys, to what we saw Gary Gensler do yesterday, which is pour cold water on all of us, and weren't shocked like normally cold water does to your body. But delays mount as the SEC defers ruling on BlackRock, Fidelity, and every other Bitcoin ETF that was due for review yesterday. The list of Bitcoin ETF applications the SEC isn't yet ready to rule on is growing, with BlackRock, Fidelity, Bitwise, and VanEck delayed on Thursday. The SEC said in the latest batch of filings that the extension was so, quote, it has sufficient time to consider rule change and the issues raised therein. Sure. The regulator now has 45 days, at least another 45 days, to address the proposals, pushing the new deadlines to mid-October, and Forrest mentioned at the beginning of the show, October 16th and 17th. Now, I do want to note the 17th, I believe, lands on a Saturday. So the 16th is, I believe, Bitwise, and you guys can correct me if I'm wrong. The 17th is a big one. That's where we have the 6 of them, including BlackRock. We would assume that we will get the 17th decisions on the 16th because obviously we're not going into the weekend without it. But damn, stop the show. We got a nuke that was dropped. Crypto Billy starting September off with a $200 super chat. Said, who's the sugar daddy?
Hey.
We can have multiple sugar daddies. Right, guys? Can we?
Yeah. We got multiple co-hosts. So.
To all of our sugar daddies, thank you. But Billy, thank you so much, man. We appreciate you. All right.
Damn,
What we're
$200
talking
huh?
Damn, my boy Billy. It is Friday. It's payday. All right. Payday for you, payday for us. We appreciate you. The SEC's final deadline to allow them to begin trading or block them. So the final day, yes or no, is March of 2024. What else happens in the first half of 2024? That is the Bitcoin halving. Guys, everything is lining up almost, I want to say perfectly. When that demand shock comes in, guys, and the supply shock comes in as well, I don't even want to, it's hard for me to explain what I believe that daily or even weekly candle would look like. Now, guys, I do want to share, before we give our thoughts, I do want to share a video. This is from Clayton, the former SEC chairman, talking about the spot ETF and how he says it is inevitable that we get an approval.
So all that said, if you were in the chair today, would you have approved it?
Well, look, I'm not there, and I'm not going to have that kind of, I do this, he would do that. What I have said is, as this has developed, it is clear that Bitcoin is not a security. It is clear that Bitcoin is something that retail investors want access to, that institutional investors want access to, and importantly, some of...
Real quick, Rocco, bring yourself in. Rocco's shaking his head. Rocco's mad. Well, what were you saying, Rocco?
This guy is the one that brought the ACC lawsuit. And I say Bitcoin is not a security, but I failed to mention that XRP is not a security. And is the one that started all this mess. Just saying. That's why I'm shaking my hand, because this guy is a double-faced guy.
Double face.
Double face.
Yeah, you got to love doing double face.
Two-faced mother. All right, let's continue.
Some of our most trusted providers who are fiduciaries or have duties of best interest want to provide this product to the retail public. So I think, as Anthony said, an approval isn't inevitable. The dichotomy between a futures product and a cash product can't go on forever. And so I think that's the path we're on.
So if it's inevitable, Jay, then what is the SEC deferring? Why is the SEC deferring the applications? Are they looking for other ways, other grounds in which to try and reject these applications? And what is the case to be made when there are futures ETFs for Bitcoin that are investors safer buying a Bitcoin futures ETF than a Bitcoin cash ETF?
What I think we are finding out is that for a long time, and I held this view. Let me be clear, and I held the view that we were uncertain whether cash trading was so easily manipulatable that retail folks should not have access to it. There are now large institutions with surveillance mechanisms who are coming in and saying,
you know what's funny is we had large institutions, right? The first ETF filed was in 2013. I believe Gemini, Winklevoss twins were the first ones. So we've had large institutions that have filed spot ETFs. It's just, well, now Larry Fink has. So the game has changed. Rocco, let's bring the video back up. It's almost finished.
No, that's not the case. We can rely on the efficacy of the cash market to a sufficient extent where we believe this is an appropriate product. That's a shift. Now, the SEC has been given time by the DC Circuit to reassess and perhaps come up with other reasons. I don't see those. Maybe there will be some, but I don't see those.
So what's your assessment then of what Chair Gensler is doing? Why if everybody in the industry is saying it's inevitable and he's just going to look for ways to reject the applications when there's a futures ETF already on the market, what's the point here?
Well, let me say this. We'll give them time. There's a roughly 45-day time period, both in the DC Circuit and on the deferral of these applications. In the relative scheme of things, and I think Anthony was he didn't say this directly, but in the relative scheme of things, 45 days is a short amount of time. And I do expect that we'll have progress on this going forward.
Rob, you've been awfully quiet there, so I'm going to ask you first.
I was looking at the calendar. 45 days. That's October 15th.
One day before. What are your thoughts on obviously, I think, well, you kind of said you thought it was possible that they would approve an ETF, right?
Yeah, I mean, I still thought it was more likely they delayed it, but I definitely thought that the likelihood had definitely increased with the Grayscale court decision. Now, it makes sense. Hey, you know what? You got to come up with tickers. You got to decide who's going to get approved first. Usually they're going to approve 5 or 6 at once. If you look at the Bitcoin futures as an example of how they're going to roll out within 48 hours, I think there was 6 different Bitcoin futures ETFs launched. So probably something comparable when it comes to the spot. And so realistically, they probably weren't quite ready with the Grayscale decision and this timeline coming up. I think it was only 48 hours or 3 days, whatever it was. So pretty short notice. So 45 days, I think, is probably more in line with realistic expectations for them to, because if they're sitting around in the room now, they're like, okay, look, we're going to delay. And now they're sitting around like, let's just get this done with. Let's go ahead and approve it. We're in the bottom, we're going through the lulls of the bear market. There's not a lot of volume and volatility right now. It's probably the best time to do it anyways. And we've gotten far enough from the spill off from the FTX disaster and Terra Luna and all of that it's pretty safe to say we're not going to have any giant tumbles. I mean, we could have some more natural pullbacks, get down to 20,000 again. However, I think it's safe to say that the markets are pretty stable right now and might be the best time to launch it. And why not start preparing it now? You got 45 days. Pick the 5 or 10 or 15 or approve them all. I don't know. But pick the ones that you want to get approved. Start getting that in order on how that's going to launch. And I think the 45 days, I at this point, if I would have had to put a percentage, say even yesterday before this news broke, I still would have probably told you about 20% chance they would have passed today. But
so what's the percentage for October?
For the next one, I'm over 50%. I think that it's more likely with the pressure that's coming down from not only politicians,
I remember, Robin,
but the courthouses.
I just want to know, Gary Gensler, twice this month, he's going to be in front of the Senate one time and in front of the House one time.
Yeah. So I think it makes sense just to I think over 50% chance that it passes in October. Yeah.
You know, there are a few analysts, Robin, that agree with you. They have said they're all going to get approved in October. I am right at that 50% mark. I know, Forrest, earlier you said that you still think it's going to be early 2024. What are your thoughts on what Jay Clayton said? I know you're not surprised by the delay, but why do you think they're going to push it back? Like, what's your logic behind that versus, hey, we lost the ruling, we know it's going to come. Let's hide behind the fact that instead of admitting defeat, let's hide behind the fact that, oh, we're a regulatory agency that abides by the law and a judge has ruled that. Why wouldn't they hide behind that narrative?
Yeah, so I don't doubt the idea that it could happen in October 16th, 17th. Trust me, I will be at my computer with the trading chart pulled up, ready to ape in if we get that news. Maybe I don't know what percentage I'd say I am, maybe 40, 50%. But the reason why they might delay until 2024 would just be because they can, right? Because I don't think the SEC has given any indication whatsoever that they are anything but anti-crypto, whether that's, whether they don't like Bitcoin, they'll admit that it's not a security, but they don't like it. They don't like crypto. They don't like Ethereum. They don't like altcoins. They don't like the crypto industry. I think that anything they can do to hinder, stop, or slow down adoption of crypto, that they will. And while they will catch a lot of heat if they don't approve this on October 16th, 17th, at the end of the day, they don't need an excuse to delay it. They can say, oh, these products are complicated, we need more time. We have, a full 240 days from when they're filed. See you in, 45 days from now. We'll see if we can get it together by then. I just don't think they've shown any indication whatsoever that they want to do. And they've never done anything pro crypto. Gary Gensler has never, he's not done anything pro crypto. So why would he start by,
Hey, he taught a course. He taught a course.
Yeah. A while back. In recent history, he's not done anything pro crypto. So maybe 40% chance, 50% chance, they just, they take the L and they approve them in October. And I'll be very, very happy if they do. But my guess is that they don't like crypto and they can just say, hey, these things are complicated. We need more time. They don't really need an excuse aside from we need more time.
They don't need more time. They really don't. I mean, nothing has changed, right? Unless my only thing is we just got news, yesterday or a couple days ago, the SEC filed a sealed motion against Binance. And a lot of pundits and experts in law were saying that sealed motions from the SEC are not very common. It can have a multitude of reasons, partly because someone, they don't want to make that person public of who gave them the information. And people started talking about how Sam Bankman-Fried was spotted in Manhattan. And he didn't have
jail?
No, he was spotted before he went to jail. He was spotted in Manhattan, I believe it was a month ago, and he didn't have a court date or anything. And so now after that, we have a sealed motion against Binance. And again, part of the reason they seal motions is because the person who gave them the information, they don't want them to be made public. So a lot of people are connecting those dots saying Sam is helping the U.S. government try to bring Binance down. Maybe Gary is waiting for that. Who knows? But I want to know in the chat, what percentage odds would you give that the SEC approves a Bitcoin ETF in October? Give us a percentage.
Also, a big shout out. We got a couple new people here spotted out in the chat. We got Howtopia, James Bond, which is funny because we got Jeremiah 007 and James Bond in here. Conrad Deneve, Tyler on Gaming, Crypto Ale, Rob, William Thompson, and DS Flat. To all of you, hola! Welcome to Sin City Crypto. Also, it's your last chance to smash that like button.
Yes. Rob, I want to get your analysis on this, okay? So Jimmy mentioned this earlier. He spent $3,000 on this, right? Apparently it's the holy grail of Lego figurines.
Jimmy did?
Jimmy did. What would you rate this purchase here? Was this a good financial move?
Is it made of platinum?
I don't know, but it looks kind of cool. I'm a big Lego guy. I know you're a Lego guy too.
I I do like a nice Lego set.
3,000 on this. Was this a good investment? What do you think?
If it's made out of gold, it's good.
I mean, if it's made of platinum, but if it's just a shiny plastic outer exterior, and I will have to say,
$3,000. That's like 1.5 Ethereum, right? Yeah.
When you put it into NFT prices, it yeah, definitely.
That's almost a mutant ape.
How much is a Bored Ape nowadays?
It went back up to, I think it's closing in on 30 ETH. I could be wrong. Forrest, do you know off the top of your head without looking? It came down to under 25. I know it got up to 27, but haven't checked. I think Robin's checking it now. But.
I remember I saw a
27.28.
I saw somebody on Twitter. I wish I would have saved the tweet. He had the highest bid for, it was like a pretty rare Bored Ape or something that somebody was trying to keep. It was like the highest bid was like 800 Ethereum.
Ooh. And
then he wrote underneath, and I know that wasn't the floor price, but he had wrote a comment on X and was like, or at that time Twitter, he said, add a 0 and we'll talk. And then
that's funny.
And then they showed him again, you know, side by side. Then it was now, and he was saying taking offers for Bored Ape, 30 Ethereum. And it's just
subtract a 0. Now we can talk again.
Yeah, there you go.
Oh, that's funny. All right, guys. I want to give last shout outs to channel sponsor Cam's Blue Wire Technology. If you want to learn how they can help your business, visit bluewiretech.com. And of course, we did mention at the top of the show, we do have a brand new channel sponsor, a team that we're really excited about. We believe they're doing great things in our space, and that is none other than Layer 1 DeFi protocol Radix. So they are a new sponsor of this channel. If you want to play in this sandbox, if you want to join the Layer 1 DeFi movement, visit radixdlt.com. You can download, you can look at their white paper, you can look at their information, you can download their browser wallet. They do have their big Babylon upgrade coming up this month on September 27th. We will have Pierce Ridyard, the CEO of Radix, joining us hopefully on that day. It's going to be a big day for the project, so big shout out to them. Also, big shout out to our special host today, Forrest, who joins us every single Friday. Forrest, we'll give you the floor. Anything you want to say? Where can people find you? They want to use some of the indicators. If they want your newsletter, if they want to make money in the bear market, what should they do?
Yeah. So there's a link in the description below, I think, Systine.ai. You can pick up the indicators bundle. I actually just released a bunch of tutorials on how to use those more effectively, and am going to be adding a full trading course to the Research Hub. So the Research Hub, our kind of motto is that we find asymmetric risk reward opportunities in the market and present them to our clients. Well, those asymmetric risk reward opportunities are further and fewer between. They're still out there, but right now there's not a lot of cool new projects launching. There's not a ton of demand. So what better time than to take what better time than to focus on learning how to trade? So we got a trading course that all the subscribers there will get access to as well. So Systine.ai and Systine Research on YouTube.
Awesome. Yeah, we do have the YouTube link pinned to the chat, so go subscribe there. Also, guys, if you want to support Forrest and you also want to support us as well, there is an affiliate link in there, so we do get a little bit of a kickback from that. So thank you for that. Also, someone asked about Missing Crypto. She'll be joining us this month.
Wednesday.
Wednesday. Okay, cool. So she'll be joining us Wednesday. We haven't had her on in a while. Robin, you got anything else that you would like to leave us with? Leave the community with? How many times are you going to hit the gym today?
How many times? One day, go one time.
Maybe once, twice. You know what I'm excited about? It's Las Vegas. I'm just happy we're in September. Bye-bye 100-degree weather.
Today is supposed to be in the 80s.
Dude, I'm so happy.
And it's been oddly humid as well.
Bro, it has been...
78 today.
Dude,
78?
78.
Dude,
how do you go from 110 to 78, man?
The one downside was anytime I had leftover pizza, I would just throw it on my sidewalk out front.
You're an idiot.
Just heat it up. No, it warms it up and it gets a crispy crust bottom.
Okay. Anyways, guys.
I'm serious, man. Okay. When it's 110, you don't need to freaking turn the oven on. You just throw it on the sidewalk. Yeah.
Saving Money Tips 101 by Robin from Sin City Crypto. Guys, go follow us on social media, on Twitter at Sin City Crypto 1. We have other social media presence as well. You'll find all the links in the description of this video, along with ways to support this channel. And go support our friend Rocco. He does have an awesome merch store, inandoutcrypto.com. If you're a Well member, you do get 10% off. You'll find Sin City Crypto merch and other merch as well, including from some of your favorite projects. Speaking of favorite, I know everyone's favorite thing is when I tornado us out of here. So Rocco.
It's not my favorite, definitely.
Guys, thank you so much for tuning in. What an amazing week. Next week is going to be even more amazinger.
Can we get a tornado replay?
Big shout out to Forrest. Big shout out to all of you for tuning in. Have an amazing weekend. We'll see you guys Monday. Thank you so much. Take care. Peace.
Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin that's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the Well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon and to the solar.